What happens when one of the hottest lithium plays in the world goes south and Goldman says the bottom ain't in yet? I bet you can guess, and we'll break it down for you on the Rebel's Edge. Hey, folks, I don't know if you saw this joker next to me on TV this morning, but he was. There he was with Maria Bartiromo. And I love Maria. She is the best and a classy lady. And Pete was on there talking about Target, which happens to be the first stock that we're going to talk about when we get to stocks today. But that was a pretty good hit, Pete. I liked it.
Yeah, they do a great job. You know, it's funny. You can supply information. You still never know what direction somebody's going to go, because going into it, we really didn't have any conversations about hitting target, but we did. So thank goodness I had looked at it a little bit already and knew a little bit about it. But tell you what, Brian Cornell's got something going on there, John, but I know we'll get to that in just a minute. So I'm ready for the macro with you, bro.
All right, let's get started, folks. We always start with the macro minute. And as Pete said, macro, let's do it. Beijing, in other words, the Chinese Communist Party, is setting their economic growth target at 5%. You remember, Pete, just a couple of years ago when it used to be closer to 9? I do. Well, they're also going to take $130 billion in long-term treasuries and try to use that to fund a bunch of growth in their economy, because they haven't seen much growth lately, Pete.
I'll just give you a real quickie, because I know we're going to cover this one as well, but I'm going to still hit it from my macro, because as you and I both talked about a week or so ago, 2 weeks ago, NVIDIA, that was macro because it affected the entire market. I'm going to say Apple because it's affecting the entire market. Those numbers for the iPhone, yuck, they look pretty bad in China. And number two, they just got almost a $2 billion lawsuit. So a lot of things going in the wrong direction right now for Apple, and that's pulling on the markets in a big way.
Yeah, well, when you were a $3 trillion stock and you're pulling back by hundreds of billions of dollars, it ain't good. No. Well, let's talk a little bit about fantastic futures.
Fantastic futures.
Well, if you were hiding in a cave, maybe you didn't see this, but gold hit an all-time record high. I don't just mean, a 52-week high. I mean all-time high.
I love gold.
Yeah, I bet you love gold today, Jared. It's traded to 2141 and a little bit more, I guess. But that's a pretty big move out of a future like gold, Pete. And it's just been moving from the lower left to the upper right on the charts for a couple weeks now.
You know what else is going lower left to upper right? Bitcoin. I know we've talked about this one, but it's worth talking about, John. It starts out February 1st. I brought this one up to Maria today. 43,000 on February 1st. Then you get to the middle of February. It's up to about 61,000. That's actually where we're closed out. We hit today over 68,900. So to say that this thing's been on a run, now it's pulling back now, and that makes total sense because this thing has been absolutely lighting it up. But incredible run to the upside out of this one, John. Is it over? I'm not so sure, but it certainly needed to take a breath. So that's what it looks like, is at least if nothing else, I think that's what's happening right now with Bitcoin.
Yeah. I mean, when you have any commodity, even one with very limited supply, because crude oil and natural gas, their only limits are, I guess our creativity, Pete, cross drilling, like with fracking and all the rest. Mm-hmm. But with something like Bitcoin, we know there are only going to be so many Bitcoins. And if people are chasing an asset like that, it's like the Mona Lisa or any great artist, Banksy, even on the more modern side. If they've got a limited supply of art, well, prices are going up if you have more demand than you have supply. All right, Pete, let's talk about Target. This is the one you spoke with Maria about, and the stock making a nice 11% move today. The street had sort of given up on these guys, I think, for a while, Pete, because they had all the problems with being way too woke. They had all those, rainbow things in the front of the store. Not that they can't sell them, but they were really sort of pushing it hard. And a lot of people pulled back from Target because of that. And now, I guess, as you say, because I know he's a good friend of yours, Brian Cornell, the CEO of Target, says, look, we're focused on growth and making money now. We're not going to be focused on this other stuff.
Well, it's an incredible turn, John, and it's about time. This is a stock that got beat up. I mean, it's actually near the 52-week highs actually today, and we'll see if it actually maybe even busts through that. But if you go all the way back to all-time highs, we're nowhere even close to that. And I think that's been the big problem. And obviously, they've done a lot of things to make things a little bit better at Target. I mean, one of the things is they've really focused on the margins, and they're absolutely laser focused on those gross margins. They were up at 25.6%, John, about 3% higher than expected. So that was something that I think a lot of people just kind of hung on to that. You look at the PE, despite the fact that this thing is run to the upside, and when you look at the earnings they were able to put up and the revenue and so forth, this thing's trading at about a 17 PE. There aren't very many stocks out there that are trading that low right now, especially with the run that we've had from the NASDAQ, from the Dow, and all the rest in the S&P. But Target is one of those. So it's still relatively cheap, despite the fact that it's made a pretty big run today. Their earnings were up 57% year over year. That's a pretty big statement. Absolutely crushed it. And I think from what the tone was, I think that they're looking to crush it again and again and again, because the way Brian put it out there, John, he said, hey, look, we're here to make money, and that's what we're going to do. And it's what they did this quarter, and I would expect them to continue on.
Well, this would be, I think, a hold for both of us. Maybe you're even still a buy, Pete. But I would say, yeah, I would not just take profits. If I owned the stock, which I don't, I had some options. And you were talking about more options were hitting again today, Pete. People betting that the stock still goes higher.
Yep. And they were even looking fairly short term, John, looking for this thing to make a pretty decent pop to the upside, a significant pop, despite the fact that the stock had already opened up with a very nice big pop of about 8.5% or so. And I think I've seen it as high as 11% since the start of the day, maybe even higher than that. But really good run, deservedly so, because this is a stock that did get hammered, but it's been kind of coming back. This earnings gave it a nice big lift today.
Yeah, it's a good day to be a TGT shareholder.
Yeah.
All right. How about GitLab, Pete? Not such a good day. It's a little bit off the pre-market lows, maybe a lot off the pre-market lows. I think it was around $58. It's back over 60 now. And the low on the trading session for the regular session was 59-ish earlier on, but that's a big drop. It's still down 18%, weaker than expected guidance. And anybody who was listening to that call would not be very enthused, Pete, about what GitLab, this DevOps software company, anticipates happening in the next few months. It is just not giving you much visibility into why things should get better.
Yeah, the earnings itself for the quarter were not so bad. But when you look at the guidance, and we talk about it all the time, John, I mean, we all want to know those numbers, but it's twofold. And unfortunately for a lot of these companies, the second fold is the one everybody focuses on. They all want to know, well, okay, that's great. Now what? And unfortunately for GitLabs, they weren't able to give people the answers that that they wanted. And so the sellers just came in. It's gotten to be pretty brutal. I think, John, at some point, though, this thing could start to maybe make some kind of a turn, but I'm not going to be the first to jump in. It's got to prove it now, because certainly they didn't, as you said, they didn't give people a lot of reasons to say, you know what, I love this thing, and I'm in that camp. But if they can make any kind of a turn in the next quarter or so, I think this is a name we'd want to look at again, because it was flying high. It could again, but right now they're stumbling pretty bad.
Yeah, I mean, I looked at a 52-week chart, Pete, and May of last year, it was $26.
Yeah.
So it's more than double that right now. And that's what gives me pause, Pete, because like you said, yeah, it shot up to almost 80 from 26. That's a fabulous run. But now people aren't really as focused on that. They're focused on, hey, you're not making money still. And that's one of the, pillars of what Pete always talks about. You got to make money when you've been around for a while. Sooner or later, you got to start putting up numbers in the black instead of the red. And they're still projecting that they're going to lose 4 or 5 cents next quarter, Pete.
Mm-hmm.
All right. How about Albemarle? This is a company that I'm shocked. I think I pronounced that correctly, Pete, but a company that I'm shocked I can even pronounce. ALB is the symbol. I looked at it, another one of these that I looked at a 52-week chart. It is down 55%, Pete. This thing is just cratering lower and lower and lower. And, now they're going to be raising apparently $1.75 billion by offering these shares to the public, which is, that's putting a lot of pressure on shares, and probably a lot of existing shareholders are saying no mas and getting out. But what do you think as far as what Goldman was saying about this thing, and maybe that the worst isn't behind it yet?
Well, I'd probably agree with them, John. I mean, first off, let's just start off with this, and you already know where I'm going. The shorts, it's like 10, 11% short. These guys have been right on this short, and they don't have to worry about any squeezes anytime soon as far as what we're seeing and some of the news flow that we've seen. We talked about this with Tesla. We've talked about this with Li Auto is another one that I think it might have been just yesterday, but you might have been talking about that one. So when you look at that, John, then I look at a cash burn of $2 billion. They got debt already of $4 billion. That's a problem. I mean, across all of that, and it's the problem is, especially chemicals, EVs is the issue that they're having to deal with here. But it's almost at 52-week lows, and I don't know why it couldn't actually get even lower at this point. So it's one of those, John, that until the EVs can turn, this thing's not going to turn. And I could see it getting back into the double digits, not the triple digits that it's in right now.
Right. And it's not far from those double digits. Last year it was $240 or something like that. And this year it's like 116 and so forth. Goldman says, yeah, it's far too early to call an end to, the demand pace that we saw before has slowed to a dribble, Pete. And that's why, all these EV makers are probably licking their chops over when they can finally pull the trigger and buy some, but they don't have the demand. So if you've got a bunch of cars sitting on the lot, doesn't matter that your price of making batteries went down by a lot because you're not selling any. So that's you're selling some. There's always some, but you're not selling enough.
Yeah.
So the backlogs are building. All right, Apple. Let's talk about this one, Pete, because like you said, it has been a tough year for Apple. The stock is down like 10% year to date. So if you're a shareholder like me, it's my largest position. It's not been a good year for that. Luckily, I have written a lot of calls against it, but I'm not quite in the black, Pete, because as much as I've collected, the stock has dropped. And so, when you're a covered writer, which is the strategy I just described, you would like to see the stock a little more stable to up than going down 10%. But they cut back on their EV, Pete. They're not going to make an electric car, apparently. They have terrible sales numbers out of China for the month of February, and that big fine that you spoke of. So those are three pretty big negatives for one of the biggest companies on earth.
Well, John, how do you sit there as the biggest company on earth, or was, or is, or whatever, multi-trillion-dollar company, and how are you the last guys to play in the game of AI? Wouldn't you think that they'd be somewhere close to the first guys in, the foot's in the door, and they're saying to NVIDIA and everybody else, hey, we're going to be buying some of those chips too, because, hey, we're jumping in, all the way. Or maybe they produce the chips themselves, whatever the case. But usually Apple is at the forefront. And I blame Tim Cook right now on that, John, because they focused on EV. That seemed like a good idea to me, but it's not becoming anything. We've never seen the fruits of that labor. And they started, grabbing all those employees and everything from Tesla. I mean, that whole process that we had all watched over many, many years now, not just months, not quarters, but years. So when you add that on top of what you're talking about, where in China, the iPhone, they're number 4 now, John. That's where in China, they used to own it, and now they don't own it. And it's becoming a bigger and bigger problem. So with that, and then also as we both have been talking about, they had that issue with Spotify. That issue is something close to a $2 billion number. Now, Apple's got plenty of cash. We know that. But Do you just want to start throwing around a couple billion here and a couple billion there? Probably not, even if you're Apple. So that one's going to hurt. They've got to make some decisions that are a little bit smarter than they've been making, John. It seems to me like Tim Cook and the gang kind of fell asleep at the wheel. So this is something that's got to get turned. The stock's all the way down. It actually got under 170 today. So, you're 28 bucks or thereabouts off of the highs. That's a little bit of an issue. And if they continue the pressure that's on there, at some point it's got to be a buy. But you also had Warren Buffett kind of loosening up a little bit of his apple as well. So there's a lot of different storylines right now why it's been pushed to the downside so hard.
Yeah. And I'm with you 100% on the AI and them being late to that party, Pete. As Microsoft has shown in the past, though, you can be late to internet and browsers and all that kind of stuff and still be a real competitor. But I just can't understand, Pete, with Tesla being an example, why they would have really put all the effort into trying to be an EV company instead of partnering with somebody for, as far as making the EV more Apple friendly and so forth. Anyway, it's been a mistake, and it's one that's cost me, like I say, because of my holdings, and you too. But I'm still a happy camper as far as where you and I both own the stock from, but it hasn't been a good 2024. Oh. All right. So we're getting ready for Pete's Red Zone Sports. But before we do, we wanted to address the Russell Wilson situation with our friend here, Andrew Siciliano, because he's always got interesting takes, Pete. And one of the guys I really listen to. I think this guy really knows what he's talking about. And here he is kind of pontificating as he walks on the beach about Russell Wilson.
Looks familiar, huh?
Yeah. Bad trades in the 104-year history of the National Football League.
Worst trade.
But I think the Russell Wilson trade was the worst. Gave up 2 ones, 2
the worst. The worst.
Drew Lock, Noah Fant, Shelby Harris, gave Russell $124 million guaranteed, and then when the whole thing didn't work, gave up a 1 and a 2 to get Sean Payton to fix it. Show me a worse trade than that. There have been a lot of bad trades in the one.
I don't know if I can. I mean, Pete, the Herschel Walker trade with the Vikings was horrible.
Horrible, but not that bad.
Yep, it built the Dallas Cowboys into a Super Bowl player. The trades that I've seen not work out, like, for instance, when Mike Ditka left Chicago and went down to New Orleans and took Ricky Williams, it was, right, Pete, I think, or something like that.
Running back.
And Ricky couldn't stay off pot long enough to pass a drug test. So, the poor guy was a fantastic football player at Texas, but apparently Texas didn't test very often. But they gave up a lot to get Ricky Williams. And obviously this Russell Wilson one is worse. And then you had to give up a 1 and a 2 to get the coach. But if you would have just been patient, you probably could have got him, because he was going to get canned anyway eventually.
Well, the coach part of it is the one that I had forgotten. But now that I'm reminded of by him and you, it's unbelievable, John. I mean, what they did to create what they did, and the fact of how they even sort of justified it. Well, he's coached a short quarterback before. Oh, great. That's fantastic. That's great method. It tells you a lot about Denver, and the problems that they've got go very, very deep. This is by far the worst trade ever in the NFL. I completely agree. You could go back and even bring up the Trey Lance trade. That was a pretty bad trade for San Francisco, but they were able to get through it, as opposed to what we've been watching now. I mean, this Russell Wilson trade, John, part of the reason Seattle still has a chance and was a 9-8 team last year, even with Pete Carroll stepping away, was the fact that they got all these players: Drew Lock, Shelby Harris, Noah Fant, all of these guys, plus all those 2 firsts, 2 seconds, a 5th rounder. I mean, it's unbelievable what they were able to get for that, John. And then Russell Wilson gets, 5 years, $242 million. I mean, are you kidding me? This was absolutely the worst I've ever seen. But in the free agency world, we had a couple of things happen. So we had the Russell Wilson thing, right? I mean, he's He's now a 35-year-old Russell Wilson. And Denver will be taking an $85 million hit on this whole thing, John. One year after another, they're going to split it all up. It's over the next 2 years. But Mike Evans, we've been talking about how deep they are with receivers, what teams should do what. Tampa Bay made a decision. We're going to keep Evans. He's a buck for life is what he said, which you got to love that. This big, huge receiver who loves where he is. 2-year, $52 million. Now, I bring that up because sometime at some point in time, Justin Jefferson from the Vikings is going to get his contract. It's just going to happen. Now, if I'm the GM, I'd actually take in, hey, what do you want to give me for him if you really want him so bad? If he's the number one, receiver in football, anybody want to trade for him? Want to do some draft pick trading? That's what I would think of, John. You know why? It is so deep with wide receivers this year that you could get the 4th, 5th, 6th, 8th, whatever, and you'd still be doing very well. And somebody's got to throw him the ball, right? I mean, is Kirk Cousins going to re-sign with the Vikings? So a lot of things going on there. I'll give you one. Cincinnati, by the way, they put the franchise tag on T. Higgins today. L'Jarius Sneed, Kansas City, is another guy who got one of those as well. He got a franchise tag, and they're trying to figure out at Kansas City, what are we going to do with Chris Jones? They don't want to lose him, John. They just got to figure out how to keep him. So it becomes a really, really interesting exercise as we finish the combine. We now get into this and this ungodly trade that was done. I don't know where Russell Wilson goes. I mean, he could go a lot of different places. There's a lot of openings out there, depending on where people decide to go and if you've got the right coach for Russell Wilson. Tell you one thing, I would just recommend this to any team in the NFL. Don't give him his own locker room. Don't give him his own parking spot. Don't make him any different than any other player on the team, because that went to his head in Denver, and that was part of the problem he had in Denver. Players didn't like him. People can say that's wrong. It's not wrong. I know guys in the locker room, they don't like him. That's just the way it is. Because would you like it, John, if you and I were two linebackers playing for the Chicago Bears and I got some luxury suite in the stadium and you're down there in the locker room with everybody else? I mean, you'd probably be looking up going, that Pete's a real tool.
Yeah, well, it's always been a team game, Pete.
Yeah.
Nobody wins by themselves. Not even Mahomes, not Brady. If you don't put some players around them and make those players better by the play of people like Brady and Mahomes, that can happen, of course. But if they act like prima donnas and if they have their own parking space and they're not even getting dressed in the same locker room and they have a massage therapist and all the rest, it's like, well, you're not really even part of this team. And first of all, you're a foreigner coming onto that team, because it's not like you had a bunch of great seasons in Denver and then you got that. That would have been a little bit different. Still, I agree with you, though, that you wouldn't want to separate that player from the team. But when you're a guy coming from Seattle into Denver, and then you want, to basically get some chemistry with the receivers, with the offensive line and the running backs and all that, that's not the way to do it. So I just think that they screwed it up all the way around, Pete. And, these days they're owned by one of the heirs to the Walmart fortune. Well, that's great because they got a lot of money, but they don't really know what they're doing with their general manager or their director of player personnel, because both of them should have said no way to that deal.
Yeah, it's too bad. I liked Russell Wilson a lot coming out of college at Wisconsin. He transferred from, I think it's NC State. And it's, he was a likable guy, but, and I still think I probably would like him, but, you can't separate yourself from everybody else. You can't have all that. It just isn't right. Quarterbacks already get everything, right? Do they need to get anything more on top of what they get? I mean, that's how bad it is. But all right, John. So the next thing, we got the NFL draft coming up. We've got 3 quarterbacks, none of which really did any of the actual work, but were at the combine to some degree. You got Caleb Williams, you got Drake May, and you got Jaden Daniels. If you were sitting there, who's your pick? Or I asked it originally, which was, all right, which one of them is going to be the bust? because somebody's going to be a bust. There always is somebody who goes high. Last year, we all know it was in Carolina. Every year there's somebody, but I don't know if any of them are necessarily a full-on bust, but I know which guy I like the best. Who do you like the best out of those guys? Drake May, Jaden Daniels, or Caleb Williams?
Jaden Daniels.
Yeah.
That's the guy that I liked the best, Pete. Good touch on the ball, good player. And I'll say this about Caleb, even though he has a lot of negative quotes because he said a lot of stupid things, the way he delivers it isn't really that cocky. It isn't like, and he hasn't said in the last several months that, oh, I want to own a piece of the team, because he knows you can't. It's against the NFL rules and all the rest. And you seem like a tool when you even suggest it. But when I see him at the combine, Pete, he's very measured and calm when he's talking to reporters, saying, why aren't you going to get tested? Because he didn't do any drills at all. He didn't do any of the medical testing either. He said, you know me. You've watched me for, I've got 30 games under my belt. I played at Oklahoma and I played here at USC for 2 years after that. You know what I can do. And I haven't had the injuries. But he also didn't beat Utah. and it's not his fault. He had no defense at USC, but he couldn't beat Washington either, Pete.
Right.
When they went to that shootout this year with he and Penix. But I think that Penix is a great quarterback. And that kid, of course, his negatives are that he has this injuries that have plagued him throughout the other 4 years of his career. And this year, he finally got through a whole season in one piece. But I think a lot of GMs will probably not be all that happy about the hits that he's taken in the past.
Yeah, I'm with you, by the way, with Jaden Daniels. I think when you look at his body of work, where this year he has 40 touchdowns with four interceptions. 4. The guy threw the ball 1,400 times and had 4 interceptions. I mean, he had 20 in his entire career, which was a long career. He started out in the Pac-12 in Arizona. So I look at these numbers, John, and then I look over at Caleb. The one issue I have, and I realize you can't put this on the quarterback because the defense did stink at USC, but they lost 5 of the last 6 games they played. Yeah. And then you look at it and you see, well, he threw 5 interceptions. Of his 5 interceptions were in those lost games. So there is something to be said for that, because those are the biggest games. That's UCLA, Washington, Oregon, Notre Dame, and Utah. So, when the chips were there to be taken against the big boys, they didn't do it. And now it's not all on one guy, but nonetheless, when you're looking at quarterbacks and everything else, you need the leader who's going to win the games for you, right? I mean, you've got to have somebody who's going to bring you to that promised land, so to speak. So I think you're right. I think Jaden Daniels is the guy that I'd go after. I like his height. I like the fact that he can sling the ball. Is he a little thin? Probably. Did he have 2 great receivers? Absolutely. But the guy is a baller, and he showed up when he needed to show up in big games. And that's what's important to me.
Yeah. And, you've got 2 Heisman Trophy winners of those 3 quarterbacks that you were talking about, Pete. Yeah. May is the one that wasn't a Heisman winner, but of course, Caleb won it 2 years ago, and this year it was won by Daniels, and I think deservedly so. You can't limp into the Heisman voting and expect to get that nod from the reporters, as much as they'd love to have another back-to-back Heisman Award winner.
Yeah.
Well, thanks for joining us, folks. Pete and I will be back tomorrow at 1 p.m. Eastern Time. Remember, you can get our free book. You can claim it by going to itsnotanoption.com. There it is. Thanks, Jared. Itsnotanoption.com. You claim it. It's free. You go over to Amazon, you pay. It's as simple as that. If you can type into your keyboard on your internet machine, as Guy Adami liked to call it, if you type in itsnotanoption.com, you will be on the webpage that'll take you to that book, and you'll get it for free. So check it out, and we will be back tomorrow at 1 p.m. Eastern Time.